This is NDTV, and you're watching NDTV Profit.
Welcome back. You're with us here on Opening Moves. Pirojsha Godrej is Executive Director at Godrej Properties Limited. He joins me right now to talk about the Mumbai real estate market. Pirojsha, good morning. Thanks very much for your time. Prashant this side. Good to have you with us here on the channel. I'm going to get to Godrej Properties in just a bit. I just want to start with something which actually struck out, I think, to everybody who's watched the Mumbai market, real estate market, sort of rise to unbelievable levels. And the news item which I'm referring to is HDIL selling a 15.5 odd acre land in Navi Mumbai for a reported loss of about 25% on its purchase value. Do you think, and I'm just saying, I mean, these are reports, we don't have independent confirmation for it. We're just talking about the industry. Do you think if this is confirmed, it will, in a way, mark a beginning of a significant correction in land values?
Great to be with you, Prashant. You know, I think I can't really comment on the specifics of this particular deal because I don't really know what the financials involved were or you know, what the purchase, when the purchase was done or when the sale was done. But broadly speaking, I would be surprised with any major correction in either the finished real estate market or even in the land market. And the reason for that is, I think, you know, things have actually been quite weak in the Mumbai market for over a year now. And prices haven't really come off very significantly. But at the same time, given strong inflation that we've seen over that period, even stable prices is actually increasing affordability to end users. So my sense is that while there may be some moderation in prices, I would be very surprised if there's a significant change in prices for either land or finished residential real estate.
You said even if prices stay where they are, they're increasing affordability. That means you're assuming that, I mean, wages and pay packets are going up, Pirojsha. Is that what you're assuming?
Yes, that is what I'm assuming. I think that is quite a safe assumption in India today. I think clearly, if you look at the last year and a half, real estate prices haven't gone up, but people's income has gone up over that period. Now, of course, that is the other effect that you have to take into consideration is interest rates. And I think one of the reasons that the Mumbai market in particular, but the real estate market as a whole has been sluggish is what we've seen with interest rates over the last 18 months with, I think it's now 13 increases in interest rates. So I think that has had somewhat of an impact. But again, there's hope for optimism because most people think the interest rate cycle is now going to turn and there are actually some reductions in interest rate expected, which I think will be a great impetus for demand.
Pirojsha, how dependent you think Mumbai, South Mumbai, or I mean not the suburbs, but Mumbai, how dependent are property prices on the financial services industry? I ask that question because what you're seeing is, at least for 2.5 years now, I mean, the financial services industry is not growing. I mean, you could get a quick reflection of that looking at where asset prices are. I mean, I'm talking about stock markets, other markets, etc. I mean, they haven't really grown. How dependent are prices on, I mean, financial services industry people actually seeing rises in the, I mean, in the pay they make, etc. And if things don't improve, you could actually get into a crunch sort of a situation. Right now, people don't feel the need to actually dispose of property at lower prices. They could still hold on to it. But if things don't improve, I mean, it might come to that.
You know, I think the financial services industry is clearly an important one for the Mumbai market in particular, particularly the areas you mentioned. I think the commercial districts of Bandra Kurla complex and the more high-end residential districts do have financial service customers as a key client. But I think there are a lot of other industries that support the real estate market in India. So I don't think there's an over-dependence on financial companies. And I think there is a case to be made that prices could come off. My sense is, and I don't think anybody can know this with any great accuracy, but my sense is that it's unlikely to happen, and I think people have been talking about it happening and expecting it to happen for over a year now. It hasn't happened, and there are reasons for that as well. While I think the environment is a little bit sluggish, Indian growth is still at roughly 7%. There still is a lot of demand for real estate. For instance, we launched a project last month in our Vikhroli development called Godrej Platinum, and we're able to almost sell out of the first tower that we've opened for sale within a few weeks. So I think it's not a kind of situation where there's absolutely no demand, and that it's, for example, nowhere close to the way the market was in late 2008 and early 2009, where there really had been a complete drying up of demand. So I don't think that's the situation, and my sense is we won't get to that situation again. Of course, the things that could lead us there are further interest rate increases, further sluggishness in the macroeconomy driven by global events. But I think, broadly speaking, a lot of things have already gone wrong in a macroeconomic context over the last year and a half, and that has not led to a price reduction in the Mumbai market. And I don't expect that to happen going forward either.
You said the first phase of Vikhroli project was almost sold out. Could you tell us, at what prices a square feet? What were you able to get?
Sure. I should clarify, we have a 600,000 square foot project called Godrej Platinum. We launched one out of the 4 towers in that project so far, and that has been sold out. The average price there is about 11,700 rupees a square foot.
Right. Just on a slightly philosophical note, Pirojsha, why should property in Mumbai cost, Vikhroli is, it's you're saying 11,700, but here in central Mumbai, property prices are at 25, 30, 40,000 rupees a square feet. Why should prices cost that much? Higher than what you probably would pay right now in Manhattan.
Well, I think, first of all, I think, Mumbai is a very expensive real estate market. It always has been. I think, if you are the financial services capital of a country, you are the commercial hub of the country, and you are the city within the country where most people want to live and work, there is a lot of demand for real estate. And I think, ultimately, if you look at it compared to global cities that are in demand, places like Hong Kong, London, New York, Shanghai, I don't think Mumbai prices are in any way an outlier. And, I think Mumbai is one of those markets where real estate is very expensive. Nobody likes that real estate is expensive, but to expect that it will come off in a major way is something that I see is unlikely. And I think, the Mumbai property market, through its entire history, has been very expensive, and much more expensive than any other city in India. Ultimately, it's a quite small land area that we all live in. It's the most densely packed city by some distance. It's actually about 4 to 5 times more densely packed than Manhattan. So I think, prices for real estate in Mumbai are likely to continue to be high. That said, I think there are a lot of steps that could be taken to try to moderate the increase in prices. I think infrastructure improvements, granting a higher FSI so that the city can grow vertically and thereby more space can be created on the same amount of land, which could reduce prices or at least moderate the increases, could be very beneficial to both developers, to citizens who are buying the real estate, and to the quality of the city we're all going to live in.
Okay. The next question is not about Godrej Properties. You're one of the few companies out there who's got a strong balance sheet, and who's you recognized for that. But generally, what we understand is that a fair bit of developer loans are coming up for repayments next year, over the next 6 months or so. Pirojsha, could you talk about that? From a developer's point of view, are we likely to see some core assets being put on the block to raise cash, that kind of thing, which we've not seen for a while now? Do you hear that kind of thing? I'm talking about the industry again, just to clarify.
Yes. I think it's clearly a question that there's probably no, one answer to. I think each developer is a little bit different. There's no question that there are some developers in the sector that have become over-leveraged, and they do have pressure, particularly given a somewhat sluggish market and the amount of interest rate increases we've seen. And I think those developers may need to look at asset sales and other options to strengthen their balance sheets. That said, I think there are developers that are able to invest further and are looking to grow and invest in new projects. So I think there may be some readjustment from some developers to other developers, but I think as a sector as a whole, the opportunity remains very, very tremendous. I think any medium to long-term view of the sector can only really leave one very encouraged.
All right, okay. That's from a stockholder's point of view probably and a developer's perspective, but for potential buyers, I mean, the prices where they are beyond the peak prices of 2007-8, I mean, it makes you a little uncomfortable. But anyway, we'll leave it at that. Pirojsha, thanks very much. Great to chat with you. Good luck. Thanks indeed for coming on board this morning. Hope to see more of you.
This is NDTV, and you're watching NDTV Profit.